Okay, let's get started on group chapter 15. I've made the screen just a little bit bigger. There's a bit of data in here. This isn't a huge practice problem, but it's certainly not one of the smaller ones either. Let's just see if we can follow along here. Marcelino Company's March 31 inventory of raw material is 80,000. Raw material purchases in April are 500. Factory payroll costs in April is 363,000. Overhead costs incurred in April are indirect materials of 50,000, indirect labor of 23,000. Factory rent of 32,000, factory utilities of 19,000, factory equipment and depreciation of 51,000. Their predetermined overhead rate is 50% of direct labor cost, and job 306 is sold for 635,000 cash in April. Cost of the 3 jobs worked on in April follow. So it looks like we've got jobs 306, 307, 308. They've given us some data here to deal with, and it appears that at the end of the month, job 306 and 306 was finished and sold, 307 was finished and unsold, and 308 was in process. They've got question marks for applied overhead, so I'm already guessing that we're going to have to calculate that one. Let's just talk about it right now if we can. It says here the predetermined overhead rate is 50% of direct labor cost. Well, so if we had to figure out what applied overhead is, really all we have to do is consider 50% of this direct labor number. So 50% of direct labor for job 306 would mean 42,500 in applied overhead. This one would have 75,000 in applied overhead because we would want half of 150,000. And then this would have 52,500 in applied overhead. So we come on down to the chart and it says determine the total of each production cost incurred for April, direct labor, direct material, and applied overhead, and the total cost assigned to each job, including balances for March 31. So nice enough that they've brought this information down here for us. That's cool. And what we see is that this is March information, right? And then April starts here. So think about this. Here's a job that was ongoing in March, but the accounting cycle ended, and now it's still ongoing in April before it is finished and sold. And that's really kind of what's happening. Job 308, I'm going to run back up, had no cost in March, meaning that it started at some point in April. It really didn't have anything up there in March at all, so nothing we have to worry about. So it's asking us for beginning goods in process. That's work in process. It's the same thing. It means the same thing, right? They're synonymous, goods in process and work in process. So what are they asking for? Well, I think they're just asking us to add this up. 29, 20, and 10 is going to be 59,000. And then if we did 35, 18 plus 9, we're going to have 62,000. And of course, job 308 had nothing in March. So that one was pretty simple. So it's bringing some information down here for us. When we come down, it says, all right, how much is applied overhead? Well, the applied overhead for April. And by the way, you can see it up here. Applied overhead was half the direct labor. Half the direct labor. Well, that means that we need to apply half of the direct labor because their rate is 50%. We just went over that number, but it's 42,500 for job 306, 75,000 for job 307, and for job 308, it's 52,500. So what's happened here is it says, all right, well, you add these things together and you've got your total cost for April. Here's my total cost for the beginning of the month, basically whatever it was in March and any time before that, really, what it was for March. And now we're going to add this in April. So it says, what's the total cost of job 306 as of April 30th? Well, that means it wants the beginning plus what you added in April. So we're going to add 59,000 to 262,500, and that gives us 321,500. We come over here to job 307, we add 62,000 to 445,000, and that gives us 507,000. And then, of course, there was nothing to add to job 308 from March, so it's just the 257,500 from April. Okay, here's our status again, and it says, all right, well, if it's finished and sold, where is this 321,500 on the books? Well, remember, the way cost flows work is it comes from product cost. It goes raw material and direct labor, all that stuff goes into work in process. That's what this is work in process. But then when it's finished, it goes over to finished goods inventory. And then when it's sold, it goes from finished goods into cost of goods sold. This one is finished and unsold. And if you followed that cost flow, that means it's in finished goods inventory. And if this one is in process, then we are talking about work in process inventory. Okay. The good thing about YouTubes and Connect group work is that if you need to pause me and go back, you certainly can. So I'm just going to keep on going. Okay, so we're moving on down. We want to complete a cost of goods manufactured for the month ended April 30th. This is back to that same old formula. We take the beginning, we add in our purchases or our total manufacturing cost, and we take away the ending, right? That's all there is to it. The thing that's different is that when we do a schedule of cost of goods manufactured, we just kind of move the beginning inventory to kind of this middle line here. What we need is total manufacturing cost. Do you remember the three manufacturing costs, the three product costs that we have? It should be direct material used, direct labor used, and then it should be factory overhead applied, not actual. It should be the factory overhead applied. That's going to give us total manufacturing cost. And then we're going to add in our beginning work in process. So that's going to be work in process at March 31, because the same thing on April 1 is March 31. And then we're going to take away our work in process at the end of April 30. Or the end of April, should say it that way, right? So where do we get these numbers from? Well, they're all right up here. If I go up to the chart, I had direct materials for the month was $455, direct labor was $340, factory overhead was $170. My beginning work in process was $121,000. My ending work in process was $1,086,000, right? Oh no, sorry, not $1,086,000. Where is my ending work in process? The only thing I had left in work in process was this job, $257,500. All right, so let's go ahead and just plug those numbers in without having to scroll back and forth. It was $455,000 direct material. It was $340,000 direct labor, $170,000 factory overhead. Our beginning work in process was $121,000. That's what gave us that $1,086,000. But we take away what we still had left in work in process, put a minus sign there just to make it look a little bit better, and you'll see that our cost of goods manufactured is $828,500. Okay, and then we're almost done. It says compute the gross profit for April. Do you remember from Principles 1 how to compute gross profit? It's not all that hard, right? What do? We're going to take sales minus our cost of goods sold. Well, what did we sell? We sold job 306, right? We sold job 306, right, which had a cost of $321,500. We sold it for $635,000. Thing is, we have a little bit of a problem. $321,500 is not the only thing in cost of goods sold. We need to take a look at that. Let's look at our general journal. What did we put in cost of goods sold? It looks like we put in $321,500, but we also put in $5,000. So our cost of goods sold account is $326,500. $326,500. So if I pull up a calculator, I take the $635,000 in sales minus the $326,500 for my cost of goods sold, and it tells me that I have gross profit in April of $308,500. All right. Last but certainly not least, we come down to how do we present the inventories on the April 30th balance sheet? Well, two of these are easy. One of them is not so easy. So the two that are easy are work in process and finished goods. We can figure that one out pretty quickly. What's in work in process? I'm going to go up to the chart. Work in process has 257,500, right? And finished goods is just this one, the 507,000. 257,500 and the 507,000, right? So let's just go plug those in. 257,500. Get the easy stuff done first, and then 507,000. The one that's a little bit crazy is this raw material inventory, because we've got to figure that out. And I think we're probably going to need to run, I think we're probably going to have to go all the way up to the top, or at least see the required. We'll just go to the top and pull up a calculator on this one. So again, it's that same formula that I've been saying since we started the session. You take your beginning, right? Take your beginning inventory, add in your purchases, right? You can take away the direct material that you used and take away the indirect material that you used, right? I mean, this is just a raw material inventory. Do we know what raw material was at the beginning of April? And the answer is yes, it was 80,000. So we're going to take 80,000 and then we're going to add in our raw material purchases. Well, raw material purchases were 500,000. So plus 500,000, right? And now, how much did we use, right? That's what we've got to consider. How much do we use? I'm going to hit the equals there real quick. So I know that we use some indirect material. Let's just get that from right here, right? So where is that? Indirect material was 50,000, so minus 50,000. And then we also use some direct material. I had to scroll that out a little bit. That direct material right here, I'm just going to follow that across the line. Direct material was 455,000. So minus 455,000, right? So that was 80,000 from the beginning of April. Add in the purchases of 500,000. Take away the 50,000 indirect material. Take away the 455,000 direct material, and we come up with a response of $75,000, and that is how we calculate our raw material, and that ends our group / practice work for chapter 15.